health and a little wealth and a lot of love.
So we've talked a lot about paying down debt and a lot about credit score. I still am interested to hear kind of your opinion on, because you've also mentioned, having several lines of credit and how it can be beneficial to you. So is debt good or bad? What do you think?
Is debt good or bad? This is such a healthy debate. So all my Dave Ramseyers out there, I did actually develop a graphic. So you are listening on the podcast. This will be up on the screen. I have pros and cons of debt is good, debt is bad. So let's go through debt is good. So there's 4 pros with debt. Mm-hmm. One is access to capital. So remember that thing I was saying about debt arbitrage? Mm-hmm.
Don't quiz me again. And
yes,
ask me
I
what
am.
It is.
Play it back to me.
So you can get a higher interest rate, but you can take money out at a lower. You were initially at a lower interest rate. You can take money out, but it'll be at the cost of being at a higher interest rate. Ish.
No, try it again. Flip it.
What? Just tell us
Flip
what it is, because I'm gonna
butcher it. We got all the time in the world. This is the whole point of the podcast.
So you have
Give me a real life example.
I mean, I was thinking that you were saying that you have an existing loan that's at a lower interest rate, but you need to have additional funding.
Okay, I don't want to confuse you about it. So debt arbitrage, again, for the second time today, is taking interest from a lower with expecting to have higher yields. So a lot of real estate investors do this. So let's say they do, they take a HELOC out, and the HELOC is, I don't know, like, don't quote me, guys. I'm just making it up. I'm not saying the rates now. But let's say that you have a 3% on your mortgage payment, which we have about 2.5% on this house. Mm-hmm. Let's say we decide to take equity on this house, but it's 6.5%.
Yes.
But then we invest it in the stock market, which is, I don't agree. I think that's over leveraged, but we think that we're going to get 20%.
Gotcha.
So 20% minus 6.5% is, so yeah. So then
technically you still are taking something from that was a lower interest rate, and you're taking money out at a higher interest rate, but you are putting it into something that you think the yield is going to be higher.
Exactly.
So I was halfway there.
You were halfway there.
Didn't take it all the way home.
I think that when you said higher interest rate to a lower interest rate, I was like, well, why would you? You wouldn't do that. I think you knew. So that's one of the biggest things: access to capital, leverage for investments, which we just applied to that example. Third is build credit history. So Dave Ramsey does not like debt. He doesn't. He says that FICO scores means I love debt. But why you love debt? You're paying interest to someone to get richer, which is not wrong. It's not wrong. But yeah, I think building a good credit history will allow you to leverage yourself even more. I mean, we're a great example of that. We have multiple real estate properties, and we are leveraged, but we're not over leveraged. We're actually very conservative based upon what we could get. So that's something to think about. This is interesting, but interests are usually tax deductible. So we're just finishing our taxes. Unless you're an entrepreneur, there's 2 really big things that gives you deductibles. One is having dependents, children's, maybe parents that live with you. But these are the 2 areas that you can have the most tax breaks from. So your interest is usually tax deductible. And the government that does that is because it's good stimulation for the economy. So if you get debt, they want to reward you for it because sometimes it creates jobs. And then last one is smooth income fluctuations. So this is where you analyze how your debt is, and you can offset that based upon your income. So you have, let's say you are an entrepreneur and you make 10,000, 10,000, 3,000. And in that example, I think you should do what? Have An
emergency fund.
How long?
3 months.
There you go. She's getting it, y'all. She's getting it.
I can't read your mind, honey.
No, well, you're getting there. So the cons is debt good? Is debt good? So the cons of that is there's risk of over leveraging, right? You don't want to overextend yourself, which we talked about at great lengths. Interest costs, it does cost money to take money out. So that's something to think about. Your impact of cash flow. So, I owe Jimmy, I owe Pam, I owe the bank, I owe this, and then I have a high salary, but I'm only seeing this amount of money, but I owe everybody, and then they all expect interest rates. Not a good thing. Mm-hmm. I don't recommend that. The potential for default, which that will follow you, that will inhibit your ability to access more debt. And then we talk about psychology and money, but sometimes people have stress and anxiety about having debt. And that's what Dave Ramsey was what we opened with today. There's a psychology around that. So is debt good? Now, debt is bad. Debt is bad. So the pros are there's financial independence, which if you know anything about my DNA, I'm all about some financial independence. That's why I'm a big part of the FIRE movement, which is financial independence. Retire early. Yes. Yes. Savings and investments. You can take all the money instead of paying interest rates. You can actually put that in investments and savings, which I think that's a good. You have overall reduced risk, which absolutely you can. Freedom of choice. So we're a big financially free household. That's what we believe in. In future episodes, we'll talk more about that once things are materialized. We try to move in silence on things, especially these big things, but that is an area that we'll heavily explore. I know a lot of people are interested in that. And emotional well-being. You can't put a price on just not owning anything to anybody. If you just sit in your home and you don't owe anyone anything, yes, you got to pay taxes on it, but you're like, hey, I don't owe anyone anything, Some of the cons, there's limited opportunities. The biggest con I see with debt is bad, is slow wealth accumulation. So I said this earlier. I started with Dave Ramsey. He doesn't believe in debt, but it's so slow. It's like watching paint dry. Mm-hmm. Dry. For me, this is why I have not pursued that strategy. It is slow. It's a very slow wealth accumulation. It is. It's delayed gratification to the nth degree. Your credit score is impacted. That is a con. So if you don't have any credit, you don't want credit, this is not a bad thing. But I think not having a credit score is a bad thing. You have mixed tax benefits. So you can complain, I pay all this interest and all this other stuff, but you do get tax benefits from that. We just talked about those are the two biggest areas if you're not an entrepreneur that you can get tax breaks on. The opportunity costs, which I'm a huge fan of opportunity costs. So I'm sitting here. If I believe in the Dave Ramsey way, if I look at my net worth, if I follow Dave Ramsey, I would probably have 1/4 of my net worth. I would. And so we did our net worth. We do it every single year. I strongly recommend everyone. I do have a template that I will be sharing on our website. Don't go out there and create your own. Why not just enter numbers? And pretty much because we hit millionaire status by 35, it's because I believe in debt and to leverage debt in a responsible way. So that's my closing thoughts to folks. Manage your credit. You got to do what's right for you, ultimately. I'm a firm believer in that. And I do believe that debt can be very, very, very good because I tripled my net worth based upon my own ideology. Because I love Dave Ramsey, I really do, but it was so slow for me. I wanted to really accelerate my wealth and to create opportunities. And now I'm not even 40 yet. I'm starting to see the benefits, these fruits of these labor that I spent so much time and energy and nourishing and being a landlord and investing. And it's been a lot. It's very stressful on us, but I'm really starting to see those benefits. And those benefits are, I'm plucking the fruit from the tree now, which I could wait longer. It could get ripened and get more juicy, but we have other passions, other interests.
With a little health and a little wealth and a lot of love, that's a life that we live. Suits and scrubs.